Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well.
The reassurance seemingly mattered little to investors and traders, with banking shares taking a big hit from first 2 days of the week. The emergency measures to provide additional funding to banks also did little to enthuse investors. Banking stocks declined in the US on Monday. And the worry spread to Asian markets on Tuesday, with bank indices plunging by more than 5%. Japanese firms were hit particularly hard, with anxiety about systematic risk leading the wider market lower. Analysts are now hoping that the US Federal Reserve will stop or at least slow its pace of rate hikes.
I think people believe that this will now, cause the Fed to slow down or even pause for a while. I haven't heard anything from them so far today in terms of what their plan is. So I would have to go with what they've been saying, which is they're going to continue to raise rates until they can tamp down inflation. And that job's not even close to being done yet. And so that leads us to the big question about whether we will or we won't have a recession. And if we do, how big of a recession is it going to be? And I think we're definitely probably have a recession on the horizon.
Although inflation has been moderating in recent months.
The brisk pace of rate hikes by the US Central Bank is in part being held responsible for the banking sector woes. Interest rates in the US have been hiked by a massive 4.25% in the past 1 year, bringing them to a near 15-year high of 4.75%. This made funds costlier and tightened the flow of money, making financing difficult for banks. The so-called funding winter forced tech firms to withdraw their deposit from banks. At the same time, higher interest rates resulted in a fall in government securities, in which Silicon Valley Bank has been investing in. The bank was forced to sell these funds at a loss to cover the withdrawals. The news created panic among depositors, resulting in a run on the bank. Meanwhile, rating agency Moody's placed First Republic Bank and 5 other US lenders on review for downgrade. These include the Western Alliance Bank Corporation, Intrust Financial Corporation, UMB Financial Corporation, Zions Bank Corporation, and Comerica. Analysts say uncertainty continues to dog the sector, with investors still extremely worried about the health of smaller global banks. The prospect of tighter regulation and a preference to protect depositors at the expense of shareholders should other banks fail. Major US banks lost around $90 billion in stock market value on Monday, bringing their loss over the past 3 trading sessions to nearly $190 billion. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.